Hi, everyone. Welcome to Real Estate with Brenda K, the podcast in Halifax where we talk about anything and everything to do with your real estate. Today, I'm joined by Scotia Bank mortgage specialist Nikki Jafari. Mortgage specialists play a key role in helping buyers understand their financing, navigate their lender requirements, and structure a mortgage that supports their long-term goals. So we're talking about all aspects of the mortgage today and what the mortgage specialists actually do, how they're here to guide you through the process, and what you need to know before purchasing your next home. And now we're going to dive in with Nikki. Oh my God, Nikki, I am so excited to have you back. Thank you so much for coming.
Can't believe how long it's been.
I know. So we'll share a quick little story before we get into our topic today. Back, 14, 15 years ago, I did the first show on Eastlink. You were my first guest. So I'm so excited. This podcast, the Real Estate Podcast, is all about everything to do with real estate, as you know. And the biggest part of real estate is the financing. So tell us a little bit about you, Nikki.
I've been in the financial world for almost 30 years. Next year, I'll be 30 years. I still can't believe it.
Wow.
I've been doing as a mortgage specialist for almost a little over 17 years. And I've been as a teller, customer service, financial advisor, worked with different lenders, and have been with Scotia Bank now for 9 years.
So tell the viewers, because they don't really understand out there, they go in the bank and they talk to somebody. You have bank personnel that can help you with a mortgage, but the banks all have mortgage specialists. So tell us about the role of the mortgage specialist.
So a financial advisor is great for your overall finances because it's like a one-stop shop, and they can help you with your investment, your day-to-day banking, your borrowing, everything under one umbrella. And some of them could be seasoned and very experienced, but for the most part, they know a little bit of everything and not necessarily specialize in one particular product. Mm-hmm. Whereas a mortgage specialist, this is all we do for a living. So we only do mortgages. Mm-hmm. So we have a lot more expertise in it. We have a lot more problem-solving skills, and a lot more time to dedicate to a file because we don't have another client waiting for us that's booked an hour out. So we could dedicate as much time as a file needs. And if it's more complex, we have a lot more experience to kind of dive into it.
To get it down. And I know the other thing, the difference between if you want to go to a bank and they're open 9 to 5 or 9 to 3, whatever banks are open now, what I like about your role is, number one, they don't have to go to the bank if they don't want to. And what kind of days and hours are you available?
Yeah, it's kind of more like when we're not available.
Yeah.
So, we do work very flexible hours, and we're available at clients' convenience. And I have clients all across Canada. I have clients that even travel overseas. So time differences. So, we make it work.
Yeah. Yeah. Because people have, today with people, they have busy schedules. They're working all day. Think of somebody that's working all day, trying to save their money for a down payment. The kids get home and they're doing supper. I know myself, I've sent you in deals on Saturday night.
Yeah.
I call you Monday and you're like, I already sent that in on Saturday night. That's done.
Well, sometimes, a day makes a difference. Mm-hmm. Sometimes clients are against tough deadlines with COFs, or sometimes they just really work double shifts or crazy hours, and their flexible, their window of availability is limited. So we try to accommodate where we can.
Yeah, absolutely. And with the mortgage specialist, you're constantly studying everything to do with mortgage. You know all the rules. But the other thing that I think is really key, and you've used this several times with us, you have relationships with the underwriters.
Yes, so Scotia Bank, we have dedicated underwriters. So each one of us are assigned to a specific underwriter who's also commissioned. So it makes a really creative environment. So they're also not 9 to 5 employees. And if you need to run a deal, you want to brainstorm with someone. So there's always that relationship. Mm-hmm. And at Scotia Bank, we have the option to work with each of the 3 insurers. That also gives us an advantage. So we can run a deal by them first and brainstorm before we even present the deal.
See, and that's what's really nice, like you said, of having that relationship. Because I remember in the past, there's been times, as like I said, we've been doing business for 17 years now, that you've said, Brenda, let me see if I can get an exception for that. And you pick up the phone and talk to that relationship in Toronto, and we've made it work. Absolutely. Yeah, great thing. Nikki, what would you think would be the number one misunderstanding today when it comes to getting a mortgage? Do you think rates is the only thing that people focus on?
For a lot of the time it is, which I think is actually necessarily not a good thing, because I always tell clients, don't buy based on the market noise. Buy on your financial situation, your lifestyle, and where you are in life. So I've seen a lot of people try to time the market with the rates, with the prices, with, when is a good time to buy. And they've actually lost great opportunities.
Yep.
And I've seen people buy, in the middle of bidding wars and still make great purchases. So it's really good to be aware and, read up on the market and make sure you know what's going on. But there's a lot of also noise that, over dramatized, information that the sky is falling and it's not.
And that's why people will say to me like, well, I'm going to wait for the rates to go down. Well, while you're waiting for the rates to go down, the home prices are going up. We're still hitting, COVID was insane. There's no market in Canada that could sustain that type of equity growth every year. But we're still sitting for 5%, And like I said, that rate, and I want to mention too, because we're going to talk the difference between pre-approval and pre-qualification today. But rate's not the biggest thing. Maybe there's a big penalty. Maybe there's, you know what I mean?
Yeah.
Those
and
are
also
questions.
when clients rate shop, it's knowing all the details attached to your rate also, where I find a lot of people overlook. So like you mentioned, like what are the prepayment privileges? What are the rate options? What are the features of that rate option? So you may be with a lender that might have a 10 basis points lower in rate, but you don't have the features of porting. You don't have the features of refinancing.
Exactly.
There's even there was a lender out there that when the rates dropped, 2 of my clients came to me to try to switch their mortgage over to Scotia Bank. But the lender had a clause that you could not pay out your mortgage unless you were selling your house. You had to renew with the same lender. Or there's a lender that you cannot even prepay with a penalty.
Yeah.
You have to wait till your renewal date.
Yeah.
So it would have been cheaper for them to pay the penalty and renew at take a new mortgage at the lower rates, but they couldn't take advantage of that.
That's right.
So people oftentimes don't read all the fine prints. They're like, I got 10 basis points lower, and off they go.
Yeah, I don't. I don't. All the times we sign for mortgage, we look at the term, it's fixed, it's closed, what are the payments, because now when we talk about these ones, because I wanted to share a quick story here with you. This was many years ago. There was a lady down in Eastern Passage, had a house, and she was in serious financial problem. She'd lost her job, but she wanted to sell her house. So I go down, and she was with a trust company because she got a good rate. Her penalty was $17,000 if she broke her mortgage. Now, she could not afford to pay that. She had no job, and her house ended up going into foreclosure. So those little key things, that's a big deal. So the big 5 banks, do they all kind of have the same rules when it comes to?
It's not necessarily the same rules. So, like, for example, one of the clients was a BMO client. So BMO has tons of products that would have all those features. And in this particular case, it didn't have that feature. So it's not necessarily that, all lenders have this or all lenders don't have that. It's that particular product that you're signing up to know what are the features of that rate and, what does it allow you to do.
So within Scotiabank, do you have like different rates you'd give for different programs?
Yeah, so like we have different packages that we offer. There's so we have a different rate for if it's an insured mortgage, if it's uninsured, if it's a rental property, and also what features you want with your mortgage. So I also find, some of the people in our industry are just application takers, right? So they just take your information, you're approved, and off you go. But there's no information. I've had clients come to me for their second or third mortgages, and you think at this point they would know all the basics, and they have no idea.
They don't, and that jumps us right into the pre-approval versus pre-qualification. So tell us the difference between, I understand the difference. Tell our viewers the difference between those two.
So you might be approved for a certain mortgage, but that doesn't mean that you can afford that mortgage.
No, I'm kind of aiming towards the difference between pre-qualification
And pre-approval.
And pre-approval.
Sorry.
Yeah, no, that's okay. No big
So
deal.
when you might go on an online calculator and you run some numbers and you're like, oh, I think I could afford this. Or you might go to a mortgage broker and they haven't checked your credit, they haven't checked your income documents, they just run some numbers and say, oh, you can afford this. That's not necessarily pre-approval, because that pre-approval is only as good as the information you're providing. So what if you think because you work 40 hours, that's your income, but you're not guaranteed those 40 hours, we can't use it.
Exactly.
Or you might have commission income we can use. You might have other income we can use. Or there might be income that you think we can use, but we can't use. So you need to actually sit down and go over all that information. There might be things in your credit bureau that you're not aware of. Maybe there's something.
I think that's the big one, Nikki, is that the pre-qualification, you don't run a credit check. Like I don't even put a buyer in my car until I know who they're with and they're pre-approved.
So with Scotiabank, when we do a pre-approval, we check your income, we check your credit. Like when we give a pre-approval, that's good. I mean, the insurer still has to approve that, but we do all our all our due diligence to make sure all the ducks are in a row. So we had a client, for example, they had a parking ticket in Ontario. They didn't know anything about it. It had gone to a collection agency. It took some time to resolve that. Or they might have something on their credit collection that they're not aware of. There might be something on their bureau that's there in error that doesn't even belong to them.
Yeah.
It takes time to fix
Or you
those.
could find things. I actually had a ticket in Italy that affected my that affected my credit. And I had no idea until I went to get some credit here, and the company in Italy put me from the rental car company.
Rental company.
Put me in
So if
collections.
we find those during a pre-approvals process, it's much easier to deal with it. There's no deadline. There's no COF date. We're not so we take as long as it takes to get all our ducks in a row. And then when you have an offer, it's a very smooth transition.
Yeah.
And also a pre-approval is super important if you're using any of the down payment, like the down payment borrowed program.
Okay, we're going to get to that just in a minute or two. I just want to bring up, though, with it, when you mentioned just a second ago, with the insurer will not pre-approve you, and which is CMHC or Genworth or whatever. So just tell our viewers why the bank will pre-approve you, but CMHC or the insurance companies won't.
It's always been the case. We always, and also even our pre-approval, we still have to approve the property as well. So just because you're pre-approved doesn't mean the property you're looking to buy would also meet our requirements. So the insurer will review a file when there's a live deal that they can assess the overall profile of the home and then of the insurer. Usually they will meet our they will match our guidelines. So if we've pre-approved a client, for the most part, they will also. But there's rare cases that they might not make the exceptions that we have. But then that's why we have 3 insurers that we can work with.
Yeah, exactly. And you've got a good relationship with them. And I have another myth buster here, is, people will call me and they'll say, well, I went to a mortgage broker and he checked my credit and he said I can't talk to anybody. Because I will often say, I'm a fan of the big 5 banks. And I will also often say, go talk to Nikki. Oh, no. The mortgage broker told me, can't run my credit twice, going to ruin my credit. Getting 1 or 2 hits on your credit is not going to kill your credit.
There are very rare cases that you're right on the cusp. And I've seen that 1 or 2 checks make a difference, but that's so rare.
But you wouldn't, if you're right on the cusp there, that's when years ago, we used to see, they would say to me, well, he just squeaked by, go out shopping and I might be able to get it past the lender. I'm like, no. Because 99% of the time, those don't come together. And it's not fair to the buyer.
Well, if we have an official pre-approval in place.
No, I mean, if you're right on the borderline of pre-approval, like your credit just inched over.
But if it inched over and you have a pre-approval in place, you're still fine. So that means you met our requirements that you have a
with
pre-approval.
the bank. I'm talking about CMHC or Genworth. Because I have seen in the past where a bank has pre-approved somebody and the insurer has turned them down. I haven't seen it in many years, but I did see it. Remember when they were doing the 0% financing? Oh my God, that was such a nightmare, wasn't it?
Well, they kind of still have that program now. Recently, it's come back. Well, I mean, there was always, the credit unions were doing it where they were lending you the down payment. But recently, the borrowed down programs are back where it's still in essence the 0 down.
Yeah. Another thing that I want to talk about, and I tell all my buyers, and I have I have oh geez, I should have brought one of my books. I'll bring it next time. You give them a pre-approval amount, and then when they sit with me, I'll say to them, what did Nikki give you as a payment? Which you always do. And I'll tell them, like, focus on that payment, then add $200 for heat and at least $200 for taxes, and then fill it out. Because you and I have both seen where people buy and they have enough money to pay all their bills. Like, I call it being on the craft dinner circuit, right? Because when you get in a house, there's always things that come up.
Not even that, like what I was going to refer to when we're talking about the pre-approvals. So people may qualify for something, but if they can afford it, it's two different things. So for example, you might have a child that's in private school that you pay like $1,000 a month for that. That won't be on your credit bureau and that won't be in our ratios, but that's going to affect your affordability. Or you might have a lifestyle that you might want to consider. You might have...
Like buying too many shoes, for example. Not that that's me, but...
Yes. Yeah. But, that's why when we sit down and make a plan, we take your overall financial situation in place. Yeah. So we talk about what is your affordability, not so much always focusing on how much you can qualify for.
Exactly. That's my big thing. That's why I really, really for them to use the budget sheet in the back of the book. So
I always start with my first-time buyers with that home buying guide. So I say, let's read this and then let's go over it. Because there's a dictionary in the back that has all of the terminologies, which is very comfortable for them because they might not be familiar with a lot of those terms. And the budget sheets and the guides. I find it very useful.
It's a really good book. We're going to put it up on the screen here so the viewers can see it because it lays out everything you need to know and all the terms. So let's talk about some of the big mistakes that people have made sometimes once they're pre-approved and between the time they're firm and they're closing. Just because the bank is formally approved you, say they change jobs mid-process.
It could be a factor, definitely. But sometimes we might be able to work around that. It all depends on, again, but it goes back to that sitting down, having the conversation. If someone's changing jobs, it's not usually something that they've decided overnight, right? So at the pre-approval stage, we can identify some of that stuff. And we can advise, like, don't go buy a new car, don't go do this. So
that's some of the big ones because here's the big purchases before closing. I had clients many years ago that went and they furnished the entire home on buy now, pay later. Zero interest, zero payments at Leon's or whatever, one of those stores there. Didn't they run a credit check on them before closing? Now they closed, their parents stepped in and paid off all the debt for them, but the bank could have rescinded financing, couldn't they?
Yeah, but for the most part, a lot of people don't even think that affects them. So they think if they have a student loan that's not in repayment, or they have debt that's not in repayment, that doesn't affect them because they don't have a payment. And they don't realize everything affects their credit. I have clients who don't even, sometimes, especially if they're newcomers, think that their cell phone bill affects their credit.
Yeah, we've seen that pop up quite a few times.
So just, utilities, everything reports to your credit bureau. So it just also goes back to that, not just being an application taker, to sit down and really guide people.
Yeah.
How many times have you and I have clients that we work with them for like a year or two?
I was just thinking that. Remember Ward and his family? Like, his credit was in such bad shape, Nikki, and you sat him down and you gave him a step-by-step how to rebuild his credit. And, 8 months later, they bought their dream home.
Yeah. So I find that's, if people come to me, they already have a firm offer and they're looking for financing, well, then I'm very limited to the advice I can give them at that stage in their life. Yeah. But if they come to me, I always tell people, before you even seriously consider looking for a home, you should start with mortgage advice, right? So sit down, make a plan.
Absolutely.
And, get all your ducks in a row and then start looking at homes. And I guess maybe we're just jumping to another tangent here, but, if you look at a house that you can't afford, nothing else will measure after that.
That's what I 100% agree with you. I say to people, and I hold buyer webinars to teach them, and I'll say to them, like, don't go shopping, because you do, like you said, you go on to an online calculator and they tell you you can buy $550,000 home, and then they're, like I said, I always make sure people are pre-approved because of the disappointment factor. That's the big one. Not because I don't want to waste time. I mean, that's my job. I love doing it, right? But I will be letting those buyers down because then you do the pre-approval and you call me and say, Brenda, they come in at $475. Now they've seen houses worth $550 and everything I show them, they're like, nah.
I actually think it's one of the greatest injustice in our industry is agents that work with clients that don't have pre-approvals. I think it sets up everybody for a rough ride. Mm-hmm. So clients aren't prepared or fully aware of all their options or mm-hmm. what they can do. I have had clients that their down payments coming from overseas where they weren't even aware of what is required for that down payment to be used.
Yeah.
So there's a lot involved in home purchase, and it's not just, let's go look at a house and put an offer.
Exactly.
So there's a lot of legwork that goes behind the scenes before that process even starts. Mm-hmm. That if you deny your clients that, they're not set up for the smoothest transition.
We're not setting them up for success. That's our job. Like the way I look at my job, yes, I'm a realtor and, I am a licensed salesperson under the Real Estate Commission in Nova Scotia and a member of the association. That's all fine. But I also I don't want to let people down. I want a level of customer service that, in other words, they're this much higher than I really think of myself as a customer service provider, trading real estate on the behalf of people. So when someone calls me and I say, have you been pre-approved? And they said, well, no, but I blah, 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 blah. And then that's when, okay, you need to talk to Nikki. Or sometimes they say, I bank at BMO and I want to go there. Okay, you got to talk to Mike Fleming, right? Because they got to know where they stand before they start shopping. That's like going out to buy shoes and not know what size you need. Like you need to know what fits. Yeah, totally.
Absolutely.
So tell us just before we go here today, because we'll have you on again. There's so much to talk about. There's a lot of confusion, Nikki, over that 2%.
Down payment. The new program.
Down payment. Tell the viewers about that. Clarify that for them.
There is a right fit for every program, but it's not right for everybody. So the program is offered through limited credit unions. So it's not even every credit union, and the 5 major lenders don't offer it. So you could buy with 2% down, but there's no insurance so there's no mortgage insurance being put in place. So that means if you were looking to move that mortgage to another bank at renewal, you can't do it until you have at least 20% equity built up in your home. So which means you're going to pay a little bit higher interest to start with and at your renewals until you're able to now move that mortgage somewhere else.
Well, that opens up a whole can of worms, doesn't it? Because a bank won't lend without being insured. So really, is the taxpayers insuring this? Pretty much. Yeah. Yeah. And like I said, you pay a little higher rate for it. So it's, people talk about it all the time. Like, sometimes things are too good to be true. Yeah.
I mean, it is a good program for if it fits your life, but I'm a much bigger fan of the borrowed down, the government assisted program.
I like that one. You've talked to it. Tell us quickly about that before we sign
So if
off
you
today.
don't have your 5%, the government will lend you the 5%. It's an interest-free loan. You have 10 years to pay it back. I use that program quite often with buyers, and I'm a much bigger fan of that because you have it insured off the bat. The loan is interest-free, and although there are programs in place where zero down mortgage where they're lending you the down payment, or you have now the borrowed down where you could, as long as your ratios can carry it, you could have it come from a borrowed source. So, but this, in my opinion, if you don't have your 5%, this is probably the next best thing.
Yeah. Well, think about it. I'll just finish off with this today because, like I said, we'll have you back. Think about how hard it is. I know my own sons trying to work full time, pay their rent, and save for their down payment. It's really, really tough.
Yeah. If I had to leave with one advice for the viewers,
that was going to be my final question of the day. Okay.
It would be that don't just think of today. Think long term. Think of all aspects of the home you're purchasing, how it ties into your lifestyle today, how it ties into your, the next few years of your life, how it ties into resale, like just overall picture. And if you have a really good roadmap, you will make more logical decisions. If you don't have that in place, you'll make emotional decisions that you might have buyer remorse afterwards.
Yep, we talk about that. And buyer remorse with the largest financial asset that you own, it can be stressful.
And we had clients, if you remember in Glen Arbor, we both told them this was probably not a good decision.
Oh my God.
But they decided that for emotional reasons, they wanted to do that.
house.
And it didn't work out, right?
It didn't work out
So
at all.
emotional decisions in a financial decision this big usually doesn't work out.
No, I
But
know.
the more sound your plan is, the more prepared you are and make logical decisions, and you have a good team, you know, your realtor, your home buyer, your lawyer, your inspector, every one of them are crucial parts of your home buying journey.
Yeah.
And if you have a solid team behind you, you're much more likely to succeed at your choice.
See, and look, they got 2 team members right here.
There you
Brenda
go.
K and Nikki Jafari. So there you go. Nikki, thank you so much for being on. It's always so interesting, and I know that we could sit here and talk for the next 2 hours.
Thank you for having me here.
Your expertise is unbelievable. We're running a banner with your name and your number on the screen here, so the viewers can, if they can reach, that we'll put your number on. It's okay with you, and they'll reach out to you?
Absolutely.
All right.
I'd look forward to it.
Okay. All right.
Thanks.
Thank you so much.
Thanks.
Thank you so much for joining us on our new Real Estate with Brenda K podcast, which we're super excited about. This talking about financing, you know, that's the biggest step. And when we work with you, we want to make sure that you understand everything's going on. And that's why it's so important. And I want to say thank you to Nikki again, because understanding that, and remember, budget, budget, budget. So we've also put the book up there. Thank you. I look forward to seeing you on our next episode. And remember, when you're thinking real estate in Halifax, think Brenda K. Cheers.